Hello and welcome to Rise of the Data Cloud. Today's episode features an interview with Michael O'Rourke, Senior Vice President of Machine Intelligence and Data Services Technology at Nasdaq. Michael is a very experienced technologist with over 20 years of experience in the field. On this episode, he talks about deploying AI to detect stock market abuse, Nasdaq's innovation in the alternative data space, rising AI expectations from consumers, and much more. So please enjoy this conversation between Michael O'Rourke and your host, Steve Ham.
Good afternoon, Michael. It's good to have you on the podcast.
Thanks. Yeah, great to be here.
Now, everybody knows what Nasdaq's core business is, but it might be helpful if you describe kind of the key dimensions of the business and also the role that you play there.
Sure. I think it's probably important to say that Nasdaq is really a technology and data company at heart, right? Everybody thinks of us as Nasdaq is, the market, but really we are a technology and data company that happen to use that really so that companies can raise capital and we can grow the economy. And we use that technology and data to create markets to bring, investors and traders together. And then we use that technology that we use to build our 27 markets and in order to create an ecosystem and then fuel markets around the globe. So we run over 100 markets globally with the same technology and really created an ecosystem around that.
Yeah. Now, the markets around the world, are you the provider of the technology platform or is it your market?
Well, 27 markets we own and operate. And that's both here in the US as well in the Nordic region. But most of the markets actually that we, that run our technology are not our own. There are more markets, that where we provide the technology, but they're operated and owned by others.
Yeah. And please, what is your role with the company?
So I run AI and data services. So you could think of that as I'm responsible for building data technologies, really to unlock the capabilities of the data, make it available to customers, create insights on top of that data. And then we have an AI lab, which is how can we use that data in order to create better products and services for customers. So really anything AI and data related, whether it's market data, pricing data that come out, as the exhaust from our markets, or creating indexes that are, create investable instruments, all the way to AI that surveils the market.
Yeah. And I think it might be helpful too if you describe kind of the array of your customers, because you point in different directions.
That's true. So, maybe I'll first start with corporates. So you think about companies that would come to Nasdaq to raise capital so that they can grow their company. So that's an important part of our business, that's kind of at the center of it, where companies come, they list on Nasdaq, they raise capital, and then we have the markets, which bring in traders and investors. So you've got the corporates themselves and services that we provide to them to better understand what's going on in the market with their tradable asset as well as listings. And then you have traders and then investors. And those investors can be asset managers or asset owners, as well as retail customers.
Right. Gotcha. Now, I noticed from your resume that you arrived at Nasdaq just in time for the .com boom and bust, and now here we are in the middle of another kind of crazy time in the markets. What lessons have you learned from both of these experiences about the markets and about technology?
Well, I think there's kind of lessons learned from both the boom and the bust. That was probably it was like 20 years ago. So I was much younger in my career, but I think what we really saw was the effect that emergent technology can have. From a positive impact, we saw just this massive influx of new companies being created, new ideas being had on how they could use, at the time it was the internet had taken off, and everyone was seeing the value of that technology, how it would be applied and how it was going to change, society and the economy. And now you can see the top 5 companies in the world are not the top 5 companies that they were back then. They're technology companies, and they happen to list at Nasdaq. So really, I think that showed just the kind of power that an emergent technology can have. But I also think we learned lessons from the bust, which was not every idea around that technology is really something that should be followed and that should be invested in. And so, we've had a lot of emergent technologies that have come out in the last, even 5 years. And while we see an influx of those companies, like for instance, AI is really taking off right now. Data companies, big data companies and cloud-based, companies that leverage cloud-based technologies are taking off. But we're seeing it in a way that's much more educated, right? It's not everyone who has an AI company, gets invested in or that those ideas get followed through. Really, they look at it and say, it's got to pass some level of muster. It's got to have good financials, and these need to be solid ideas. Mm-hmm. Yeah. So I think that these new kind of the effects that when new technologies come out, both people realize it more quickly, but also are more aware at the risk they're taking.
Yeah. Now, how has Nasdaq's own technology, its platform technology and its analytics technology changed from the time when you first joined?
Well, I would say, at first it had started to change in just the throughput, the amount of transactions that we have to handle, going from thousands a second to millions to multiple millions of messages per second, within the systems. We also saw the latency expectations really, the expectation that the amount of time it takes to transact a trade and receive a quote really was quite low. They would expect it in a number of microseconds. And so we saw our systems becoming more and more efficient and able to handle the influx of new participants in the market and the new type of trading in the markets. But with that, I think even more recently, what we're seeing is the type of products that people want. So now it's just table stakes. Obviously, your trading systems are going to be able to handle just massive amounts of information and handle massive amounts of transactions per second at a very low latency. That's table stakes. And now what we're seeing is the systems and expectations from clients are that they are more intelligent and that they're being given insights to better understand not only what they're investing in. So if you're an investor, understanding that tradable asset and information analytics around that, but also if you're a trader, having more information available and insights available so that where to route the data, where you can get best price, things like that.
Now, do you provide insights for your customers, or you just provide them raw data about transactions and other elements?
Well, we do both. So really, there are some customers that just want the raw data, and they're going to build their own custom, data warehouses and analytics, and that perhaps will end up being their secret sauce. Mm-hmm. But there are many things that we've commoditized for the financial community because, it's really needed across the market. And so those are things that we look to provide where, how can we make it easier to access data? And then how do we provide analytics that most of the trading and investing communities, would expect to have.
And do you provide them with dashboards and things like that?
Sure. I mean, you can look at, like, for instance, we purchased several years back a company called eVestment, and they have analytics for asset owners and asset managers. They can go in and look at these portfolios, and they can see charts. They can see information analytics about those assets and about their portfolios. Similarly, we have another investment we did with Dorsey Wright, where you can see advisors can log in and they can see charts and analytics and dashboards and whatnot, so that they can better understand where they might be making or where they should invest their money.
Yeah, that makes sense. Now, I've read that last year, Nasdaq began deploying AI to detect stock market abuse. Tell us about that. What was the problem you were trying to address, and how did AI help you address it?
Yeah, that's one of those areas that, when we started thinking about it, it almost seems obvious that AI could do this pretty efficiently, and better than a human could, certainly. So today, what we have, or let's say pre-deploying our AI technology, we had algorithms that would look for illicit trading, and there are parameters that you set in order to try to capture these illicit activities. And so illicit activity meaning if someone like insider trading would be an illicit activity, or if you're trying to front run the market, or if you're trying to spoof the market, you're trying to manipulate the market in some way. So like perhaps giving them a signal that everyone's selling right now, and then you go and buy, right? So they're trying to manipulate the market. And so we have algorithms that actually quite effectively find these type of activities. But we wanted to see, that kind of our hypothesis was, could AI be more dynamic in catching these type of illicit activities? So whereas prior to that, you would kind of tweak different parameters and settings, and during different market conditions, you might want to set different thresholds to be able to catch these things. The AI could be more dynamic. And so as people are interacting with the market, coming up with new novel ways of manipulating it and trying to get away with market manipulation, the AI and machine learning models could then just cope with that and take that into consideration and adapt and learn.
So the AI would spot new anomalous patterns that you may not have been aware of before. So you didn't set it up to spot those, but it spotted them and alerts you. Is that the way it works?
Yeah. I mean, essentially we teach it like you would teach an analyst, right? So what we do is we give it examples. We say, here's an example of what spoofing looks like. And we give them, several labeled examples. And then we train the model to now be able to find that. And what it can do is it could be more flexible about what that looks like. So for instance, if an example happened within a 2-minute window, it could say, well, actually, I'm seeing the same behavior, but it's happening over a 5-minute window or a 30-second window. So we don't have to account for every single variable there. It could be more adaptive.
Now, has the technology worked the way you had hoped?
I would say in the beginning, it didn't. So we had a lot of lessons learned. We made our first deep learning models back a few years ago. And what we found was, we started training them as I had described, giving them some examples. You train the model. And we had some positive results at first. And then when market conditions changed, or we tried it on a new market, all of a sudden the models would fall apart. They'd be very brittle.
Right.
And what we realized was we needed a better way to make these kind of robust deep learning models. And that's where we kind of had the aha moment and started using transfer learning and human in the loop learning, where we would train a model not just on one market in one scenario and one set of volume, but rather training it on multiple different markets and then transfer the learning from one to the next. So you train it on 6 different equity markets, or several different equity markets, and then you move it over to commodities, move it over to derivatives, and you start getting a model that is much more robust and can handle changes in kind of market activity much better. And so today our models are far better about finding illicit activities than before, but also better at keeping the number of like false positives down.
Oh, yeah.
So like when it says that this is an illicit activity, it's more likely that the AI knows, it kind of puts forth better cases.
So whenever you get alerted that it may be illicit activity, you have to investigate, and that's an investment. So you don't want to have to do that too much when it's a false positive, right?
That's right. Yeah. And that's going to end up being probably our next investment in AI is actually in the investigation portion as well, because that's obviously an area where it could start to put a case together and say, well, this isn't the first time this person has done that.
Right.
They've repetitively done that across these, different markets, different ports.
So what are some of the other uses that you're putting AI to?
So some of the other areas, I would say one of the more exciting areas would be in the alternative data space. So think not data coming directly out of the market, but that is useful for understanding in a financial, a tradable instrument. So meaning like things like, I'll give you an example. Traditionally, we would use trades in quotes. Like, so what are people asking for a particular security? So if I wanted to buy, let's say Ford, I would look to say, what did it last trade at? What are people willing to buy and sell it for right now? And then you would have your fundamental data. So like the 10Ks, 10Qs, or your earnings reports that come out. And you say, okay, I can see their financials and I can see what the market sentiment is by looking at the price, and you'd make a determination. But with alternative data, and that's really kind of taking off, you could look at other types of data to better understand that asset. So for instance, for Ford, you might say, well, I don't want to have to wait until quarterly earnings in order to know how you're doing. So what I could look at is perhaps, number of insurance policies being opened, for Ford vehicles.
Right.
And then I might say, well, also, how about just number of car insurance policies being opened in general? So how is the market doing versus is Ford doing? And that would kind of give me a better understanding of what's going on before the earning report comes out. So that's a case where, though, we use AI in order to take those alternative data sets and then link and transform it into something that's understandable, that you can kind of relate one to the other.
And in this case, you're doing it on behalf of one class of customer, the investor class, basically.
Yeah.
Right.
Yeah, more or less. I think it's also very useful for corporates, though, too.
Mm-hmm.
In many cases, the corporates themselves, the companies themselves, will, they might want to see, well, how are my competitors doing? How am I doing versus my competitors? And, why is my stock price behaving the way it is? And some of this alternative data can be useful to, to like a CFO or something that wants to understand what's going on with their stock in the market.
Mm-hmm. Mm-hmm. Now, one of the huge trends over the past 15 years or so in computing has been cloud computing. And I wanted to find out, are you migrating a lot of your data and computing to the cloud these days?
Yeah, I would say that's kind of our first foray into the public cloud was really around data, right? So it's like we put the data there first. I would say, years ago, it was for more non-critical, batch-oriented type processing, where you put the data out there and you run some processing on it. Then it moved up to critical, kind of end-of-day batch processing. And now we put most of our data in the public cloud at some point, because it's so much easier to run our analytics, to run insights off of that. So really what we've seen is almost most of the company's data has had a pretty fast shift to the cloud, where if you're building a new application, even it's kind of defaults to being in the cloud, and you have to come up with some reason why you would have some on-prem instance for it.